You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Henry the FLOWMASTER Schwartz from CBOE. The Option Block is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again. It is Thursday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in the markets? Well, let's find out together because it is time for the Option Block. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever-exciting, ever-engaging, at least we hope so, Options Insider Radio Network. Reminding you, if you like what you hear, do keep rating and reviewing on your platform of choice. The show's been running for a while, well over 1,000 episodes, so we have quite a nice backlog of reviews, but clearly the new reviews help the new people continue to discover the content out there. So if you like what you hear, do throw a few stars our way. And then, of course, if you want to go above and beyond, and who doesn't these days, of course you have questions. Luckily, we have the answers for you in our pro Q&A sessions where we bring in some of the best minds from the world of options and derivatives to answer those questions. You want to access those, all the archived episodes, live streams, giveaways, a whole bunch more. TheOptionsInsider.com/pro is the place to go. And now let's go around the horn, see who's joining us on the old hot seat. I am pleased, very pleased. I'm going to go backwards. Usually I end with him on Thursdays. Today we're going to start with him because he's sitting right next to me. He is the FLOWMASTER himself, Mr. Henry Schwartz from CBOE, where we are beaming in from right now, sir. Welcome. Welcome to the show live and in person.
Thank you, Mark. And yes, we are in the Mothership at CBOE headquarters at the old post office in Chicago. And I'm glad to be here in person with you.
Lovely digs. They have a candy bar down there. They have a soda machine. It's like you're hanging out in the world's nicest 7-Eleven here, sir.
Absolutely.
All right. And also, there's no Slurpee machine. That's what we're missing out there. Nice little
They
Slurpee
have
machine.
Nitro Brew Cold Coffee.
Oh, Nitro Brew Cold Coffee. That's the adult version of the Slurpee, I suppose. All right. And someone's falling out of bed over there. So while he gets himself out of bed, let's go out to the quiet hinterlands of Chicago, where we are joined once again by the uncleist of Mike's, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, how are you, sir? Did you fall out of bed today?
I did not fall out of bed. I think that must be Andrew unmuted or something. Yes. But nonetheless, happy to be here. I don't have any nitro coffee, but I got the Option Block. Who needs nitro coffee?
Who needs caffeine? Indeed, this show will just inject right into your veins and perk you up. And last but not least, I think he has recovered from falling from his chair or whatever was going on over there on the shores of Maine. We are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, are you there, sir? Are you alive, and can you hear me?
I think so. I can certainly hear you. I didn't know everything would be so loud.
It sounded like you were juggling tin cans while chewing nails and gravel, sir.
Well, that wouldn't be totally out of character, but I was just pouring some water. All of a sudden, well, I guess we'll talk about it, but the CBOE kind of reminds me now of what is it when you visit Bloomberg in New York, what is it, the 7th floor, when you walk up there and there's that canteen with all the free stuff. It's quite deluxe. I can't remember what floor that is. The 5th or 7th floor, but everybody knows it's been at Bloomberg. You got, oh, would you like a refreshment? It's like every refreshment under the sun. So the CBOE is trying to up their game, I guess.
Well, you got to make people actually want to come to the office these days, right? As opposed to the old days when there was just a place you had to be and that was it. Now it's like, come on in. Do you want nitro brewed coffee and perhaps an array of candy selections? These are the fun things.
Yes.
All right. Speaking of fun things, we got a lot of fun in store for us because it is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block, the portion of the show where we break down, surprise, surprise, what the heck is trading? I ran these numbers before I headed down here, so a little bit behind. We're trying to catch up now as we're getting everything working here in the palace that is the CBOE Mothership here. But it seems like crisis averted, at least for now, out there in the markets. Everything is looking firmly green right now as we started off the day. A little bit more on the mixed side. Dow up about 0.2%. S&P closing up on 1%, close to it, about 0.95 almost. And the NASDAQ saying, hold my beer, kid, once again, up about 1.5%. That means all of our vol friends are down a wee bit, fluctuating a little bit. Right before showtime, we had the VIX closing in on 20.5. That was down nearly 5 points, actually, about 4.8 points out there now. If I pull it up out there now, I think it's back up over a 21. Yeah, about a 21.3 out there now. So we have seen a little bit of evolution. VIX actually firming up almost a full point in the last 20 minutes. Took me to get down here out there. Still down about 4 points since our show on Monday. VVIX, the ball of vol, giving up the ghost a wee bit as well. Again, none of this is to be too surprising out there. We did have the Fed this week. The Fed very much an earnings event for the full market. So you usually expect some of that vol to come out and vol of vol as well. VVIX down to about a 95 when we kicked off the show. It's down 22 points from where we were last show. So VVIX continuing its move out here. VXX 47.5 down about exactly 8 points from where we were on Monday. UVXY hanging out right around a 5, down about 1 1/3 handles. It needs to hang out there for a little bit longer than go out there. That would be perfect. Just saying, just talking my book a little bit. SVIX 1566 down about exactly 2 points from where it was this time last show. UVIX about an 18, down over 6, about 6.65 from last show. And VolQ, aka the at the money vol of the NASDAQ, no skew here. 2320 down, almost 3, about 2.8 points from where it was this time last week. All right, let's go around the horn. Let's go in order of proximity to me. So, Mr. FLOWMASTER, sir, A, good to see you in person, and B, a lot going on out here when you're not snacking on delicious snacks. What's catching your eye out there in the markets today, sir?
Well, I mean, it's really interesting because this kind of crisis of confidence in the banking sector is kind of, we're living through it, right? We're working our way through it. Everybody is intensely paying attention to the Fed and the financial bailouts that they're not calling bailouts, and just kind of how this is going to play out. I think getting through that 25 basis point hike, I think a lot of people are on pins and needles for that. So it kind of feels like things are, smoothing out a little bit. We're not seeing any panic. We certainly saw some panic last week, briefly, but things are kind of rebounding. So I mean, I'm keeping a close eye on kind of the sector activity, financials, energy, tech names, to kind of see what looks like sector rotation and people kind of putting their money to work across different sectors differently.
Now, you've been sending me that great reports of the kind of the trade of the day out there. Do you have one yet for today? Do we have a trade of the day yet for today?
I haven't looked it up yet, but I will find something for you.
These are fun. Andrew, you must be jealous of me because I'm getting these great emails from Henry now, breaking down pretty much the best trades of the day out there. And this is exactly what we were talking about on the last show. Remember, he teased us with it?
He did. And I like, it's kind of like I don't get like the nice pro box from you, and I don't get the trade of the day from
There we go. Here we go. The umbrage. I was just trying to tweak the umbrage.
I swear, being the redheaded stepchild on this show, just getting the whooping all the time is rough, man, every day. Although TOSAW is actually the redheaded stepchild in reality on the show. I don't know, stepchild, but he's the redhead. I wouldn't mind seeing the trade of the day from Henry, but whatever. I can handle it. I can handle not getting it, I guess, since that's sort of what's been happening the entire time so far.
Well, since you're a second-class citizen anyway, I'll let you go second. What is catching your eye out there in the markets today, sir?
Well, a couple of things here that I don't like. So, all right, so you have we have the blow-off kind of upside Q. And to be honest, I think like money is running for stocks with good balance sheets. Nobody really is saying that, but I'm just going to say I'm going to put my old school trader hat on. I'm curious what TOSAW and Henry have to say in yourself about that. But like, I feel like it's not just the tech and the AI. I also feel like, money is going after the more solvent type company, and dollars do this every once in a while. Money does this when everybody's freaking out. Schwab coming out saying they could pay their depositors back 100%. Again, I don't know if that's true, if they can or not, but Schwab is sort of what I would say a less risky type investment management company, mostly just housing funds for RAs and stuff, on their own customers. They have so, again, not exactly sure what's going on there. But it's like, it just reminds me of a story from many moons ago. Like, when I first started trading, we were backed by Drexel Burnham. Drexel Burnham blew out. And then when we had that kind of contagion crisis in, let's say, the mid-90s, because Merrill might have been lending, or was going to lend to long-term capital. And I asked one of the partners at the firm by then. I was only been in the business for like 6 or 7 years. I was anyway. And he's like, "Oh, Merrill Lynch blowing out. That would take a lot, because back then Merrill wasn't doing anything crazy." Then fast forward 10 years later, Merrill does blow out, gets acquired by Bank of America. And now I'm finding like Schwab's down quite a bit from its highs. So again, it's a bank. It has, I think it's mostly just, clients have money in their retirement account or whatever, and then, they have a checking account. I don't know how aggressive Schwab is, but Schwab is not up. Okay, so that's a little panic. People could be panicking and selling it. I'm trying to figure out if it's a good buy. I haven't dipped my toe in because I keep kind of vacillating back and forth. The second part is, right now I'm seeing VIX kind of wind up on an up day. I'm just looking at here. Let me get the exact. Just looking at kind of, and I'm mostly going by where the puts are trading. So they're sort of back to where we close. So like VIX is only down 48 cents today, right? And the puts are down a little bit. Vol is down a little bit. Like none of this. I'm not as warm and fuzzy about this rally as I thought. So it's like, okay, so they did the 25 basis points, like they say, to maintain credibility and all that. And they're like, okay, we'll have only maybe another 25, and that's our terminal rate is this. And they talked all their stuff. But then Yellen, what did she say? Like, oh, we're not going to stop all deposits, which, nobody expected the FDIC to insure all deposits, right? The insurance is only so much. Everybody should know that, right? But, I guess, and then I guess the big question is, and again, I don't know, the fact that all these banks are holding, are they getting hosed by holding treasuries and high quality mortgage-backed securities? So I think there are still questions out there that haven't been totally answered. I think, as Henry alluded to a little bit, clearly we're not at that kind of nosebleed highs for vol. But, it's not I don't feel like the all clear whistle has been blown yet. So it's kind of a wait and see for me from a market. Looking at the market point of view, and like you see like Schwab and Bank of America, they're all kind of at recent lows. Not like the low, but they're lows since the contagion thing everybody was worried about last week. I don't know. It's a little sketchy. I'm curious to hear what everybody else has seen or heard, but I don't think that the action doesn't feel as bullish as the market being up today is. I feel like that moving the Qs is more of a kind of an odd flight to quality or flight to better balance sheet, and they clearly don't care what they're paying for the stock. So it must be something else. I'll leave it there.
Well, you missed it, sir. While we were talking, they just sounded the all clear siren here in CBOE, and they came out and gave us each more candy. So you missed it all here. So clearly, being a second-class citizen, sir, is working against you. Candy is delicious. I can't eat it now during the show because I'll have chocolate and peanut in my teeth while I'm talking. But fun stuff, Mr. Flowmaster. If you can get that Snickers bar out of your mouth, sir. I know you dug up your trade of the day. What do you want to share with our people here?
I did, Andrew. You're making me feel guilty, so I'm going to put you on the distribution list for the.
Don't let his whining get to you. You got to learn to ignore his whining. That's the first stop of being on this show.
I love all of the co-hosts equally.
See, like maybe some of that'll rub off on Longo if you stand next to him long enough. Probably not, but we'll give it a shot.
So one thing that jumped out, it was interesting, right? Because yesterday into the Fed, it was actually a really quiet day, right? The market was just kind of didn't know what to do. We were relatively flat. Volume was really light until 2:00, and then they hiked rates and we ran up because everybody was kind of like, okay, they did what we thought they were going to do, and then we actually had a very hard sell-off in that last hour. So what's interesting about this trade of the day, which is simply a report that looks at each opening directional sweep and then marks it to the close, and out of the top 10, 5 of them are Tesla put buyers, and so. I'm looking at Tesla volume yesterday. It was almost 2 million contracts, the most active single stock. Half of that traded in the last 90 minutes of the day. Okay, so incredibly concentrated. And what we saw was it's interesting because I was talking to some friends that I trade with, and what do you think is going to happen? I said I think we're gonna climb after the hike, and we did. And I thought I was so smart. And then we sold off a solid 2.5%.
Yellen said nope
from the top. But in Tesla, there were some pretty chunky buyers. The most profitable opening trade yesterday was a buyer of 1,000 March 24th, 195 puts for 224, just about 3:00 when the stock was 199, and stock finished around 191. Okay, so they managed to catch a nice 9-point sell-off in the stock, and they made $300,000 on that outlay. It was 136% return. So, and there were several others like that. So I agree with you what you're saying, Andrew. A lot of people are like, okay, I'm not sure where the market's going, but I want to avoid these names that have any potential weakness, whether it's balance sheet or some sort of economic recession. And people are looking for the safe places to put their money, some opportunity. So, but I'm looking at the top 8, and 4 of them were Tesla put buyers.
That sounds like old school odd block there with our Tesla put scans. We have to go back to those days again. The garbage puts. See how many of those are like
50 strike, right?
Yeah, they were like 10. They were like 10 and 5 puts. They were absurd. And speaking of absurd, it's actually the opposite of that. It's quite tranquil out there. They are the hinterlands of Chicago, known as St. Charles. We are joined by Uncle Mike. Uncle Mike, what is catching your eye on a decidedly, at least right now, Uncle Mike type of day?
At least for now. So when early in the morning today, or not early in the morning, but early in the trading day today, when the S&P was up north of 60, we're looking at it, it's like, oh, okay, everything that it sold off yesterday, it just got back today. And so we're not there anymore. We're up in the mid 30s right now for the SPX. But the thing that I'm noticing with this is that I will agree in that I don't feel concerned, and I'm willing to bet that most people feel the same way. I'm not concerned about contagion from the bank of Microsoft or from the bank of Apple or from the bank of say, well, in this case, like Netflix is lighting up my tape today. So companies like that are what's driving this today. I think that there's no doubt about that because of where we're at. I'm looking at like a JP Morgan that's up 28 cents on the day, or 0.17%. Not a large move along those lines. So ironically, in the bizarro world, which continues to become more bizarre, every day that we live ever since 2020 happened, we're now, it almost feels like we are going to the safe haven of technology. XLK is up over 2% on the day in the sector world. And just looking at pretty much everything else, we got a little bit of moves, and we got about 0.5% of gain in consumer discretionary. And then a lot of other things are either flat or down. So this is no doubt a flight to safety, but the market is viewing safety as technology right now. And ever since COVID happened, I wish I had a nickel for every time I said, I never thought I would say this, but, and then you have to say it, but this is just another weird world of a weird land of bizarro world. In the tech space, or I'm sorry, in the bond world, we are relatively flat today on the 10-year. We did get a lot of buyers after the Fed announcement, but we're still about where we were a week ago. Just we had a little dip earlier in the week, and then we bought back to where we were, about where we are today. It's up slightly on the day, but we are getting a little bit of buying going on with that. And so it'll be interesting to see after the next Fed announcement, which from what I can tell of the Fed funds futures, I think it's a 50% chance of, or at least this is when I looked earlier this morning, 50% chance of 25 bips, 25% chance of no movement, and then 25% chance of an actual 25 basis point cut. And that just sounds kind of weird to say, but in the world with which we live, you never know. So this is, as we've said before, we're kind of playing a broken record here. This is the most Fed-driven market that I have ever seen.
That it certainly is. And let's see what else we're seeing out there from an overall markets and volume perspective. Let's start, as we are wont to do, in the big indexes. Let's go out to VIX first. VIX looking surprisingly sluggish on a day where normally it has been putting up some numbers of late. That is reflected in the ADV. It's back up to 853,000 contracts a day. That's up close to 50,000 just from our last show on Monday. So VIX has been putting up some numbers of late. Today, looking kind of sluggish, 308,000 contracts. And that would be a lot back a month and change ago when it was averaging less than right around 500,000 contracts a day. But today, now, when we're threatening 1 million a day, 308,000 looks a little bit light. We'll see, of course, if the markets turn around again, if that number continues to increase. SPY closing in on 6 million. So SPY not looking quite so sluggish. 5.81 million right now. The ADV about 9.5 million. So SPY is not messing around these days. The S, 1.6 million. Actually kind of light. We're starting to see, it used to be this time in the show, listeners, and Henry, it wasn't that long ago, we would say, oh, S is at 1 million contracts by this part of the show. It's a crazy busy day. Now if it's not hitting 2 million, we're like, oh, but it's pshaw, that's nothing. So we're at about 1.6 million right now in the S. The ADV closing in on 3 million, 2.86 million contracts out there. So the S, once again, just putting up some numbers. Small caps, IWM, 838,000 contracts. So small caps are coming to play today. The ADV is a little over 1 million, about 1.07 million. So looks like they're going to hit that today. And the Qs bringing up the rare 2.15 million contracts. The ADV, 3.06 million. So the Qs seem like they're going to hit their ADV out there as well today. Let's break out into our most active, see what's going on out there from a top 10 perspective. And you know what? On a day like today, you might think it's all macro. The micro has kind of been left by the wayside. It's actually not the case. Cost you 341,000 contracts to break into the top 10 today. That's nothing to sneeze at. That gets you to our old friend Microsoft. Looks like about, well, on the day today, it's actually up a whopping 7 handles. 7, almost 7.2, trade about 2.6%, trading 279 and about a half right now. On the year, a little bit of a different story. On the year, obviously, we topped out north of the 300 level, 316 or so, but not that far away from it again. And certainly the 52-week low of 213 and a half, very much in the rearview mirror. So, yeah, Microsoft, man, just the old flight to quality asset that is Microsoft. Now, Uncle Mike talking about the tech names being the flight to quality. We were joking on Monday's Crypto Rundown show. Is crypto the flight to quality? I guess you can ask that same question about Microsoft and big tech now. Number 9, a name we haven't seen on our top 10 in a little bit. Usually it pops up around earnings time. That's really about it. It's Netflix, 359,000 contracts. Netflix up 25 and a quarter today, listeners, or 8.5%, trading a little north of 319. My goodness, they are driving Netflix out there today. So a rare, strong update. Usually we talk about Netflix and it's usually wiping something out to the downside today, blowing the doors off to the upside. Number 8, yes, I said all the way down at number 8, listeners. It's the Amazonians, 405,000 contracts. Amazon up 1.25, so a paltry 1.25%, trading almost exactly $100 right now. So Amazon looking kind of quiet by comparison to some of these other names that are just rocketing up the list out there today. Number 7, we have the chip zone coming early today, listeners. Number 7, AMD, 408,000 contracts. AMD trading a little bit north of 100 now, 101 and about 40, 101.4, up about 3.8 handles out there today. So a nice day for AMD as well. The name that wasn't having so much of a nice day, let's see how that's looking now. This is Coinbase. Coinbase, obviously, never a good day when the SEC comes knocking on your door. That's what happened today with Coinbase. Coinbase 66 and about a quarter, off nearly 11 handles, or about 14.2% right now. So a rough day for them. They're doing 437,000 contracts out there. If we look back a year, though, obviously a different story. They got as high as 206.79, and that was back about almost exactly a year ago. And the low came, looks like it was right around the end of last year, beginning of this year, 31.55. So there's still a long way from that 52-week low. We'll see if today's news can contribute to driving them back there a little bit. And you know what? It wouldn't be a top 5, but these days, listeners, without a little bit of some contagion fear names sprinkling into the top 5. And number 5, we have Bank of America, 554,000 contracts on the tape. 27 and a quarter is where it's trading right now, off about 40 cents. So they're not really coming for it today, but they are putting up some numbers out there. And then number 4, we have the chip zone coming back on our list, the second half of the chip zone, listeners. This is, of course, NVIDIA, 616,000 contracts on the tape, up 780 today, or almost 3%, about 2.9%, trading 272 and about a half right now. So quite the run here for NVIDIA. And then number 3, yes, I said number 3, listeners, it's the fruit company getting kicked all the way down to number 3. Apple putting up 627,000 contracts today, trading right about 160, 159.96 right now, up a little over 2, about 2.1 handles. That's about 1.35% on the day. So a nice little move for them. You know, the market's happy the day that Apple is green yet again. And then number 2, what has managed to take the number 2 spot from Apple? It is good old Block Inc., a.k.a. the name formerly known as Square, ticker symbol SQ, 629,000 contracts on the tape for them. They're off a little over 10, about 10.1%, trading 62.5 right now. So that's off about 14% on the day. So a bit of a rough day for them out there. On the year, they've gotten as low as 51 and about a third. So they got about 10 handles more to go, actually about 9 handles more to go, it looks like. Actually, no, about 11 handles that more to go to the dark side here. And then they will be at their 52-week low. Looks like that came around October of last year. So not a great day for them out there. You know what number 1 is, listeners. Do I need to tell you at this point? You've been listening to the show for a while. Henry was just talking about it. It is Tesla, a.k.a. the winner of the Trade of the Day contest, at least for yesterday. 1.35 million contracts on the tape right now. Tesla trading 193, up about $2 on the day. So intriguing stuff out there. In terms of earnings, we are coming up towards the tail end of it, listeners. We had Foot Locker on Monday. We had Nike and GameStop on Tuesday. Petco and Ollie's Bargain Outlet and Chewy and KB Home on Wednesday. Today we have General Mills and Darden's Restaurants. Stay tuned to the website, theoptionsinsider.com. Click on the Options News and Articles tab. As soon as we have the latest updated earnings move results, and earnings season reports, we will get those out to you. Meanwhile, it's time for us to keep on going right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we get weird, we get wild, sometimes we get whimsical, and we unleash the eye of Sauron upon the markets and see what it fixes its fiery gaze upon. And before I look into what our eye of Sauron found today, the FLOWMASTER has his own gaze he likes to fix on the market. Mr. FLOWMASTER, what are some of the names that caught your eye out there today?
Well, one of them that I'm looking at right now is Open, which is Open Door. It's a tech name. No, it's I think it's a tech financial, but it's one of these names. Like when the market gets kind of wild, one of the things I like to keep an eye on is when I do movers, which is just a simple command to see the biggest movers among option names. When I start to see a lot of things that are moving more than 15-20%, to me that means there's a lot of weird stuff going on. And so Open is one of those. It's up. It's only a $2 stock, but it's up 17% today. And what we're seeing is actually kind of a funky two-strike put buyer. So the trade itself is an 8,600 lot of the March 2 puts, March 31st, two-strike puts bought for 28 cents, opening when the stock was at $1.94. So what it feels to me like people are kind of seeing some of these very whippy moves and trying to pick their spots. Another kind of focus is, when you see these low dollar stocks starting to move, double-digit percents, is we start to see people looking for these short squeeze dynamics. So I start to pay a lot of attention to the implied borrow rate from the option combos, even the posted borrow rate if you were to short it. So we've seen more of those in some of the $1 and $2 stocks.
I thought you were going to say when this was a sub $2 stock, someone was loading up on like the fives, right? Something crazy like that. None of that. Got puts, cheap puts. We just had the Viceroy on our Pro Q&A. Oh, I think you listened to this. You were on that one. So we have to tell him about this one. He loves when people spend a lot of money on puts on a sub $2 name. We'll find that deeply invigorating. Open Door trading right now, listeners, $1.78, as Henry said. A bit of a rough year out there for Open Door Technologies. They were trading north of $10. Not about exactly a year ago, 10.05 to be precise. They have since come for it pretty much straight down all year, off about 7.5 handles, or almost 81% on the year. So a bit of a rough year for Open Door, and if Henry's paper is to be believed, I guess the bottom has not been found yet in Open Door there, Henry. So intriguing stuff. No swinging for the threes, no swinging for the fives. It's gobbling up some puts, so some deeply cynical puts, as I like to say. All right, what else is catching your eye out there today, Mr. FLOWMASTER?
EQT Corp. It's an energy name, I believe. And this is kind of a funky, and this is a bullish one. This is the kinds of ones that we like to keep an eye on. In my kind of experience, when you look at this directional option flow and you try to use it as a starting point for a trade, sometimes it works, sometimes it doesn't. But I tend to lean a little bit more on the bullish ones, right? Because, there's a couple reasons you might want to buy a put. One is because you think the stock's going to go down, or the stock's going to go down. The other is simply to hedge a position. Upside call buyers is a little bit more directional. People looking for leverage, people making a little bit more of a calculated bet. And in EQT today, stocks around $29. We saw 7,700 of the Jan 75 calls bought for $1.30 to open. Those are a good 120% out of the money, expiring in about 7 months. And I'm looking at I was just talking to Mark about some of the proprietary CBOE data that we are lucky enough to be able to carry and trade alert right now. One of them is this indication of customer buying versus non-customer buying. And this EQT trade, I can actually see it's an opening customer buyer. So that's one certainly keep an eye on. A firm position, most of it, a market maker sold about 1,500 out of the 9,000 or so. So that's one that I will definitely be keeping an eye on. Let's put it on our permanent Eye of Sauron list.
Our permanent to be watched list. All right, we'll come back. What was a month again for these?
EQT January 75.
January. Oh, it's January. We got some time on these bad boys. Speaking of January, let's look back really quickly at the year here in EQT. Trading right around 29.5 right now, listeners. Not a huge mover today. On the year, it's kind of been a bit of a tumultuous one. It started off the year pretty much about exactly where it is right now. It's up about less than $1 net on the year. But since then, it's had a lot of upside swings. It got up to about $52, looks like, in June, and they sold it off again back to close to 30 before August, before rallying it again in about September, back up to about 51, almost $52 again, before selling it off ever since, all the way back to where it is right now, 29.5. So it's had a few flirtations with the upside. It sounds like, if this paper is to be believed, then perhaps this person is betting on yet another swing to the upside before Jan expiration. All right, what else you got for us here, Mr. Flowmaster, today?
Looking at some of the just the heavy delta trades, I see a 15-cent buyer in NGD. That's a gold name. This is the Jan 1.5 calls, and it's a 95-cent stock. So I'm long a couple of different gold names from some old positions, and I know that Mike or Andrew does like to keep a close eye on gold and silver, and the performance there has been pretty solid. I guess it's also a play on the value of the dollar and kind of gold as a safe haven. It's also why we've seen some of the cryptos. I think Bitcoin's around 28 grand again. So the NGD Jan 1.5 calls a 15-cent buyer 10,000 times this morning, also opening. I like it.
You like it?
I like
There you go. That's faint praise there. Yeah, this is another one, another cheapy name. This one trading about $1 right now. So it's all sorts of crazy gold. In fact, our IFSOR scam came up with some weird calls. I think it was I Am Gold Corp, another sub $2 name. So there's a lot of weird cheapy gold names popping up on the radar out there today. Let's look at this one. Obviously, the saga, this one going to be a little bit different. On the year, the high was almost exactly $2. Listen, it was $1.99. That was about exactly a year ago as well. They have since obviously fallen off their highs, got cut pretty much in half. Their actual low came, looks like, around September of last year. They hit about 61 cents. So they have done a lot of living over the course of the past year, hanging out kind of close to the middle of that range now. But intriguing stuff out there for New Gold Inc. Since we're talking about weird gold names, let's just get this one on here really quickly, because this one kind of came on our radar this morning as well. Then we'll move on to some of your questions, listeners. We had I Am Gold Inc. ticker symbol. I knew you'd like this one, Mr. Rock Lobster. I Am Gold. Ticker symbol IAG. This is definitely a newcomer to the odd block, because I would certainly remember this stock. Trading right now $2.55, kind of unched on the day. On the year, a little bit of a different story, as you might imagine. A year ago, it was trading full on about almost $4. Looks like it got tapped out around 380 or so, and then they kind of came for it again, hit its low of right around $1.26, $1.25 or so, right around September, October timeframe. Then they rallied it again by the beginning of this year, end of last year, got up to close to $3 again, and hanging out right now at around $2.50. And it seems like someone is looking for maybe a little bit of that upside move to return. We saw 10,000 of the Jan 5 call. That's why I was joking about the fives before, Henry, on your other sub $2 name. They're not playing with the threes, Mr. Rock Lobster. They're not playing with the fours. They went straight to the fives. Looks like they gobbled them up for 19 cents. The stock was pretty much right here when these went up. There obviously are going to be earnings between now and January. The next one's going to be on May 2nd. So, Mr. Rock Lobster, first off, if you have any thoughts on any of this paper Henry's laid down, have at it. And then B, how are these I Am Gold calls? How do these sit with you, sir?
Well, leave it to you to find the goofiest name ever of all of the names listed in the.
That's why I get the big bucks.
That's right. That is why you are the Grand Poobah of the Options Insider Radio Network. Yeah, because we also saw something in like New Gold. That's another little chunky gold name that I haven't heard. Saw paper in there. Yeah, you know what? This is a very. It's kind of funny because I know Henry sees a lot of paper. Like sometimes I feel like funds just go out and they just blast away with these like little cheapy shots, and they probably burn 9 out of 10 of them, but one of them makes a ton of money. And it kind of feels like this, but I several gold names we saw some buyers, a lot of precious metals, so and silver too. So this appears to be just like some of the other paper we saw today. Just buying calls and see if we have some kind of gold explosion. So and that's what it looks like. But again, it's right in the middle of the market. But it's leaning a little like they're buying it.
All right, listeners, now it's time for us to keep on rolling. It's Thursday. It's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block, the portion of the show where we break down what you folks have on the brain. But let's play it up while Andrew continues to fall off his chair there. So are you okay, Mr. Rock Lobster?
I did. I muted. I'm on my phone, so I don't have my awesome thing. But I am now aware that I have to stop falling off my chair. And,
balance issues there on the shores of Maine. Let's play off really quickly what we asked you guys last week. We said everyone has contagion risk on the brain after the meltdowns of Silicon Valley and FRC and all the names you've heard of, listeners. So we thought we'd ask you last week, is this a canary in the coal mine of worse systemic problems ahead or just a tempest in a teapot? And our audience couldn't really make up their minds. It ended up 51% saying canary in a coal mine and 49% saying this is the tempest, this will blow over. So our audience surprisingly evenly split. We don't see that too often. Usually you folks have an opinion and you're not shy about sharing it. But right now, or let's just say last week at least, you guys and gals were very evenly split on whether this contagion thing has legs or not. Fast forward to this week, kind of an oldie but a goodie. We were debating this on the Options Bootcamp a couple of weeks ago, so we thought we'd put it out to you this week. Very simple, very straightforward. What's your favorite option strategy for legging into equity positions at lower prices? Are you going to go, let's say, a 1x2 put spread, so buying one, selling two? You're going to go the old standby of the short put? Or are you going to lean with other? Mr. Uncle Mike, we'll start with you. What is your vote, and what do you think our audience is voting for?
I mean, I like keeping things simple. I just like to. Call me old fashioned, but I just like to sell puts. So that's where I go.
I call you old fashioned.
You do, and I think the audience will agree with me in this case. And then going back to last week's poll, I don't think I could have decided very easily either. So it really doesn't surprise me that the audience is so split down the middle like they were, because we just don't know yet. I'd like to think this is the tempest in a teapot, as Mark Longo would say. But I lived through 2008, and I remember just that was back in the day before, or that was back in the day when you could see what the futures were trading at when you walked by the old CME building on the way to work, and just seeing S&P down 100, walking by the CME, and just seeing that back when they had that, just thinking, oh, well, maybe I'll have a job today, maybe I won't. Before my financial advisor days, and having lived through that, I never want to say, oh, it's nothing, because I lived through it when it was something.
There we go. Mr. Flowmaster, same question for you. What do you think our audience is leaning towards? A short put, the old 1x2 put spread, or maybe do you have some magical other up your sleeve that you prefer?
In my experience, the 1x2 sounds better than it feels, because the 2 can really start to make you feel sick to your stomach. Even though, you simplify, you're like, wait, it's just being long a spread and then short a naked extra. But the problem is that when prices start to blow out, that 2 can look pretty rough on the screen. So I would kind of go with just a straight old short put, kind of pick your spots, try not to be too emotional about things. That's my choice.
The 1x2 is more for if you don't want to really draw your line. You want to have a little bit more wiggle room, right? That's when you come in with that one. But you're right. The short 2 can sometimes come back to bite you. Mr. Rocklops, you get the final word. Short put, 1x2 or other, sir?
Wow, I will kind of deviate with these guys a little bit. I do like the 1x2, but mostly I use it as a vehicle for selling the higher vol. And it does allow you to have an option closer to the strike. So, but it's the same thing as anything. It's like you're still short the extra contract. So eventually, you do 1x2s, you're gonna own something. So it's the same. So I think it's more vol sensitive. If there's decent vol, then maybe it makes, because sometimes a lot of times the 1x2 you don't get enough credit to really make it worth it. So I think it's more it's a vol-centric type strategy as well. But but what is everybody going to take? They're going to, oh my word, favorite strategy, leg into a stock position. I'm going to say, I don't think I'm going to say other. I think I'll say everybody will say short put. I think the 1x2 is still a little esoteric for everybody.
Yeah, that's a little bit maybe a options 201 kind of thing. So right now the short put is winning the old plain vanilla short put. 47% of you choosing that, followed by the 1x2, 39%, 14% going other. I'll have to see if they've sent in what these others are. I love it. A gambler said short put ratio spread seems reasonable. However, this is 2023, so the era of 0-day options and failing banks. Fortunes are made and lost in 5 minutes. Therefore, my vote is an at-the-money short put spread, where you hope for a huge move down and leg out of the long put with perfect timing. Then someone's writing about Chinese IPs. I don't think that has anything to do with our poll, but they sent it into our poll. So there we go. You have about a day left, listeners. At options is a place to go to make your voice heard. Mr. Uncle Mike, another question for you, sir, while Andrew continues to fall out of his chair. Let's go out to Melton. That's an interesting name, Melton. He has a question for you specifically, Uncle Mike. He says, for Uncle Mike's strategy block, when I'm adjusting my covered call strikes, how close should I let the stock get before I consider rolling? Uncle Mike, this is the age-old question. I'm sure you've touched on it once, twice, or 100 times in your strategy block. Melton wants to know, how close to the fire should he get before he starts rolling?
Well, Melton, like they say, if you get too close to the fire, sometimes you can get burned. I think you need to have the rule that I have on that is just have a rule in place before you actually do it. So in other words, if you believe that the premium that you're getting is going to be sufficient for you, and possibly even a gain if it comes close to your short strike price, because let's say it's out of the money and enough time decay has gone away, then just have like a limit in place as to where you would be. So in other words, the way that I'll set up is, let's say that I'm looking at a short covered call and I'm looking to sell an out of the money covered call. And as I'm looking at it, no matter what, as soon as I get into it, I put in a limit order to get out of it once I can get out of it for 80% of the potential credit. So in other words, let's say stock's at 50, I sell a 53 call for $1. I'm going to have a limit order, a good till canceled limit order going in there right on the spot to get out of that call at 20 cents. So that way, whether it's time decay or a quick downturn in the market, I'm getting out. And so I feel comfortable that way because that's what the objective of this was in the first place. And so if I get close to the fire, if that stock is going up to the 52.5 level, if I know that I can get out of that call for break even, maybe then I'll get out of it. Or maybe if I can get out of that call for $1.50 and then maybe roll it up to call it a higher strike price for another $1 and then just kind of start over again, maybe, but I'll have a plan going into it. I would say that 95% of the time these days, over the course of the last 5 or 6 years, what I've evolved to is if I want to sell a covered call and I'm fine getting called away, then I'll do nothing. I'll go to the fire. I'll let it burn me because of the fact that I've already made my maximum profit and I'm happy that way. However, Melton, if you want to save yourself a lot of misery and grief, or at least the method that I've used to save myself some misery and grief, playing with fire can be dangerous. And when it gets close to the fire, when you roll, you do this, you do that, it seldom works, or at least in my experience, it seldom works. So if it's something to where I want to have my cake and eat it too, what I've evolved to the last 5 or 6 years is I would sell a call spread. So in other words, in that example, buy the stock at 50, sell the 53 call, then maybe buy the 55 call for another dime or 20 cents or whatever number that you want. Yes, you get less premium that comes into play. However, the premium that you're going to pay for the freedom to do nothing, that's like a way with which you can stand by the fire and you got fireproof gloves on. And I'm willing to pay for those fireproof gloves because if for some reason the stock does go way up, then you get to be a part of it instead of trying to roll up. I've just gotten burned so many times trying that I seldom, not to say never, but seldom will I do that anymore. So hopefully that helps you, Melton. And that's my take on it.
And our take is it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everyone, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on until our next show on Monday, or in the case of the FlowMaster, his next appearance next week. Are you coming back into town next week? Are we doing it in person again next week, Mr. FlowMaster?
I'll see what I can do, Mark.
I'm going to miss my candy fix. What are you doing?
I can get you an ID card.
Oh, there we go. I can just come raid the candy bar. What are you keeping an eye on until your next appearance, sir?
So I'm specifically looking at some of these beaten up financials as buying opportunities. And, obviously you have to be very careful because we saw with the implosion of Credit Suisse and some other stocks, these things can go to near zero on you. But, there is a contagion. There is a lot of fear. But when there's a lot of fear, people just do trades without thinking very much about them. They just unload what they can, not necessarily what they really want to. So I'm looking at kind of any bank name that's gotten, that's down 30, 40, 50% in the last 5 weeks, and looking for put spreads to sell, to just kind of put on some long exposure. And then we're also working on, we're sending a team over to a conference in London to specifically present a slide deck on how to use options data in equities trading, which, I think to many of the listeners, we kind of get it, right? There's directional flow. There's flow that tells you the volatility is increasing. There's changes in vol skew. And so we're trying to kind of widen the audience for that.
There you go. And Mr. Uncle Mike, same question for you, sir. What are you keeping an eye on until our next show on Monday?
I mean, just watching the macro news. This is a Fed-driven market. And so I wish I could just hire a private investigator to follow around Powell and see what he does, what he's thinking, and how things are doing. But for the most part, just watching macro news to see how things pan out. And the other thing that I am watching is just it's going to be interesting to see what comes about Mr. Putin hanging out with his buddies from China to see if that does anything to the dollar. Keeping an eye on that. Don't think it's going to be any big news in the near future, but definitely something worth watching.
And last but not least, Mr. Rock Lobster, sir, what are you keeping an eye on until our next episode?
I will real quick comment on Mike's his call spread against the stock. Also, when the stock rips, let's say in the long calls, it gives you a call to sell. You can whack out the call and take the gain on that. And, if the stock ever pulls all the way back again, you can end up with a pretty nice little trade there. So it gives you an extra goodie on the trade. So I do like that as a trade alternative. What am I looking at? I am looking at the VIX going up steadily. VIX puts are less than they were yesterday now into the close. Now, I know vol has come down a little bit. VVIX is down a little bit. However, VIX is now green on the day. None of this is actually very good looking, I have to say. It could be a little better. So I'm just going to say, it's not great. It is not great that sort of VIX got the rebid here, and the financials are weak. So I'll just say that. So I think, again, I'm not a banker. I don't know. I just figure they know they could figure out that interest rates are going to go up next year, but I guess maybe not. Who knows? We don't know exactly how it's all going to pan out, but it's certainly the sell-off of yesterday. It looks like it could certainly be the sell-off of today with the last 2 hours of the day here. So that's what that's the news. It's the Fed all the time, as Mike said, and now that they're not being the Fed right now, they're sort of done. See how quiet they can be. But those guys are going to come out and say something stupid and crappy.
I was just going to say, 5 Fed governors are waiting to come out and just run off at the mouth about whatever.
Yeah, and make no sense whatsoever.
So look forward to that. Probably it's happening right now as we speak, probably. So there you go. The Rock Lobster leaving us with a little bit of ray of sunshine, as he is wont to do. Unfortunately, that is going to do it for the Option Block today, listeners. If you want more in your lives, don't worry. I'll be back in a little bit with This Week in Futures Options, breaking down all the action out there on the futures options side of the fence. But before we go, let's go one more time around the horn. Let's start with the FlowMaster. Mr. FlowMaster, if they want to check out any of this cool data you're talking about here for themselves, where should they go? What should they do?
Just go to CBOE.com and look for services and find Trade Alert, and you can actually send us a trial request. We're happy to help people out. We're happy to kind of show them the light of the Eye of Sauron and different ways to characterize options flow, because that's what we live for. So hope to hear from you.
There you go. Send the customer service email. Just say, "Show me the light," in the subject line, and then I look forward to all the.
At least I can go tell them right now. Hey.
All the confused looks as I forward these to Henry, saying, "What did you say now on this?" Show me the light. I like that. Send that to Henry and the CBOE staff there. Care of Henry. Show me the light. That's good stuff. Mr. Rock Lobster, if they want to see the light with you, where should they go? What should they do?
Yes, check out optionpit.com and also Money Map Press for my stuff. So if you want to learn how to trade options, make heads and tails of all this, and trade products that help you learn how to make money in real time, come on over to optionpit.com. We have been doing it now for, hard to believe, 12 years, almost 13 years. So there you go. You guys have an excellent day.
And last but not least, the uncleest of mics, Mr. Uncle Mike, sir. If folks want to reach out to you, talk covered calls, or just about anything else, where should they go? What should they do?
Follow me on Twitter at Mike TOSAW, TOSAW. And feel free to check out my website, stcharleswealth.com. Exciting announcements coming up probably within the next couple weeks, but I'm going to just make you wait on that one. And then also follow me on Twitter. Because in the next couple of weeks, the much promised for many years Row video is going to be coming out, and I will be releasing it on Twitter by the end of the month.
I'll believe it when I see it. You've teased us with that for 10 years now. I've lost track. So when we
it's
look
coming.
for it, give him a follow on Twitter, listeners, at Mike TOSAW, TOSAW. If he doesn't do it the next week, make sure to send him all your hate mail and diatribes. That's going to do it for us. Back again in a little bit for all you live folks with This Week in Futures Options, all you on-demand folks that'll be hitting the network later on today. Back again tomorrow, noon Central, 1 p.m. Eastern for volatility views, and then back again after that one more time for all you cool kids in the pro for options oddities before we come back again next Monday, another episode of The Option Block. Stay safe out there, everybody.
The Option Block is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.